Now I want to switch to, well, I'm going to say back to a subject I've been talking a lot about. You're probably getting tired of me talking about it, but I've mentioned last week, I feel very, very strongly about using financial incentives to help people get involved in the housing market now and not wait any longer. So what caught my eye this week was an article from Yahoo Finance. It was just yesterday. The headline caught my attention. Seller incentives aren't cutting it as home buyers struggle with affordability. Well, of course, the struggle with affordability, not a new message. We've been hearing that for a couple of years now, right? Everybody's, upset, worried about the high rates, the high home prices. Affordability is an extreme challenge. We've heard that over and over and over again. Obviously, there's a lot of truth to that. But what was interesting about the article was it goes on to say that rate buydowns were the least popular concession offered by sellers. Now, mind you, this article is speaking to the resale or existing home market, not the new home market, although, as I'll comment on in a second, the new home market is referred to in this article. But what the writer wanted to point out was, at least in some parts of the country, and in this case, she's referring to the Mid-Atlantic region, Bright MLS is an MLS back east. She actually provided some interesting data, some interesting statistics in terms of the nature of the types of concessions that are being offered to home buyers. And there's the list for you to see right there on the screen. The number one concession, and I want to talk about a couple of them. The number one concession, at least through this MLS system back east, was a seller credit to the buyer for repairs and inspection items. Almost 39%, almost 40% of the time. Now, in my opinion, that's really not comparing apples to apples to say other like financial incentives like a rate buydown. Why? A credit for repairs, that really is not part of the negotiation process usually in terms of when the purchase contract is initially agreed upon and executed, but rather that is something that comes up more in once escrow has opened. And once the buyer has gotten their home inspection, well, that home inspection oftentimes is going to call out all kinds of things that are recommended for repair. And so that often triggers the buyer to either demand that some of those items get done, or if not, demand that they get some consideration, typically a credit, like a closing cost credit, in lieu of making those repairs. So yes, that does happen, 40% of the time, almost half the time. But again, in my opinion, comparing that to how often buy down of a rate happens, I don't think that's an apples to apples comparison. Now, the second most common seller concession, at least in this market area that's described in the article, closing cost assistance. Now, that is usually a seller credit toward closing costs. So it's good to see that that does happen almost a third of the time. And yeah, I've handled lots of transactions where that's involved. In this particular environment, certainly a closing cost credit for the buyer's benefit is of value because probably, if not the primary reason that keeps people from buying homes, certainly the second biggest reason is amount of cash for down payment and closing costs. So the closing cost assistance certainly does address that. So I am in agreement with the writer that this is a common incentive and is effective. However, it doesn't really address today's current biggest objection, and probably what has been for the last year or two, and that is the very high level, or perceived to be very high level, of interest rates. As I've said more and more often than not, current rates are not historically all that high. The next one, rent back from buyer. Again, that has more to do with once you're in escrow, if there's a need for the seller to stay in the home because they need to wait to move into a new home or something, then oftentimes there'll be a negotiation to rent back the property from the buyer after the buyer's completed their purchase. I'm not sure I would consider that a seller concession, again, to be in the same comparison boat as looking at financial incentives to buy the home to start with. So again, that more comes up in terms of an individual transaction. Home warranty, I don't know. Yes, that's a concession. That's almost routine now, that any purchase transaction is oftentimes going to involve the seller paying for a buyer's home warranty. Not a significant concession at all. It's generally a few $100, $500 to $700, $800, but it does happen. Actually, only 15% of the time. That seems kind of low. I would say in our market area, it's offered much more often than that. And of course, if the appraisal comes in low, about 9% of the time, the seller will be prompted to lower the price because the appraisal came in low. But again, only about 9% of the time. Here's what struck me. Buy down of the mortgage rate, only 3.6% of the time. That's even less than other. And we don't know what other is. So rate buy downs are offered by sellers to buyers in only the half the time that other incentives unnamed are offered to buyers. Isn't that interesting? This, to me, I find is so very odd. Why? Because what is the biggest issue for home buyers right now? If not the price of the home, it's mortgage rates. They're worried about high mortgage rates and being able to affect or being able to handle their monthly payment. So given that that's the case, why in the world are rate buy downs so low on the list of most common concessions that sellers provide to buyers? Well, let's talk about that a little bit. One thing I will point out was pointed out in the article, your most affordable homes, the homes listed at the lower end of the price spectrum, those tend to offer less concessions to buyers than almost any other price level. Why? Very low price levels have extremely high demand. And in most cases, I think sellers are not feeling they need to offer concessions to get their home sold, because if it's a decent home, but at a very affordable price, chances are they're going to get a lot of activity, maybe even in a lot of markets, multiple offers. But the other thing that the article pointed out, which I've been harping on forever, and you know that, is builders are aware that buyers need more financial assistance. So again, it reinforces my message for some time now that in the existing home market, agents in particular, you should consider home builders as your competition. And this writer is one of many who recognizes and acknowledges that builders are aware that buyers need more financial assistance to buy homes. And so this is part of the reason why more buyers have been new homes are appealing more to them because of the financial assistance that's being offered to them. In fact, this article pointed out that 58% of builders are offering sales incentives, with temporary buy downs being one of the most popular concessions that they are offering. So I had to bring up this article again. It reinforces the message I've been conveying for a very long period of time. And I can tell you from personal experience in the business we're operating every day, we are doing this. We're getting ready to close, for example, a purchase loan right here in Palm Springs, single family home, just under $600,000. The buyer and their agent came to me for a pre-qualification, told me that they wanted me to do that pre-qualification at a price that was going to be below the list price, which of course I agreed to do that. Excuse me. But when I did, I suggested to them to allow me to show them how the amount of the price concession they wanted to ask the seller for, if I could show them how it could be used in a different way. They agreed. I provided them some numbers, a worksheet where I took the amount of the price concession they were going to ask for, and I applied it instead to a 3-2-1 buy down. They liked it. The buyer really liked it. The agent went ahead and submitted the offer with my idea, a 3-2-1 buy down at the full list price, but with the dollar amount of the concession being that would have been used for the price reduction applied fully toward the 3-2-1 buy down. Seller accepted it. And we are closing that loan next Monday, the 11th. And I got one of the nicest thank you emails from my borrower that I've ever received, thanking me for offering that kind of information, that kind of option to greatly improve her financing terms. She's going to be starting her first year on her mortgage in the mid-3s because I applied my ideas, this idea of using financing incentives, particularly 3-2-1 or 2-1 buy downs in lieu of price reduction. It works. We're proving it every day. I encourage you, if you're looking at a home to buy, don't offer a lower price. Call me. Let me show you how you can use that value, those dollars, in a different way to give you a much better financing package. So, excuse me. So again, I just wanted to reiterate this message. It can be very successful if you focus on it, and we can help.